going? Welcome aboard. It is I, your boy TJ. Yeah, and it is that other day, any other day, that will bring you, when you see us together, it means what? Yes, it's about that time. We're talking about tax and property and tax. And boom, Lebo, how's it going?
I'm all right. How are you, my brother?
I'm okay, man. I'm all right. It is a
Okay.
good Friday. And you've been strong on your side?
I've been great. It's been a great week. I just made some moves and I just added a new member to the family. So things are looking great.
Boom, boom. So our podcast has got a new member and a little boy or little girl?
It's a boy.
Boy. Awesome
Yeah.
stuff. Congratulations to you and the missus. And
Thank you.
have you named the baby already?
Yes, his name is Kosi.
Right. King.
Yes, it means king.
Nice. Well done.
Yeah.
Well done.
Thanks a lot.
I think the journey starts now, right? And this is where I think you've been building up your legacy.
Yes.
But a legacy with no successor isn't really a legacy. You die with it, man.
Yeah.
And yours has come to light.
100%. Success without a successor is not success.
My man, that's good. Well done. So you don't want to take time out. You know, we can take a break. You know, you don't want to take time out.
I have another mouth to feed.
I like that. So back in the days, it was just you and Mrs. and you
Yes.
were working 10 to 15 hours, and now you got an extra mouth.
Yes. Now
So you need to bump up.
18 hours now.
That's the spirit, man. That's the spirit. Right. So today we're talking about legacy, right? And it's great to have Kosi around. And let's jump into this conversation about legacy.
Yes.
And if you've never been here and this is your first time, welcome aboard. We do these shows, and I talk to Lebo because Lebo is not just a father. He's just joined the club of being a father. I'm also a father of two. I hope that you don't want to overpass me, Lebo. Ne? Maybe four. Let's keep it at two. But nonetheless, Lebo is a father just like me, but he's not just a father. He is also a property investor, and not just a property investor. His background is tax. What's your background, Lebo, for those that don't know you?
I am a business accountant by profession.
Right.
I hold 4 qualifications,
Yeah.
all in finance, of which the highest is an honors in taxation. So I am qualified business accountant.
Awesome stuff. And this is why I hang out with Lebo, because he's a little bit clever than I am. I don't have 4 qualifications, but when I get stuck, I go to Lebo. And Lebo has the right answers. But more importantly, we come out to you every week and we discuss different taxation issues. And for some of you, you've been sending us questions. Continue sending those. We will address those questions. And if this is something that you enjoy listening to, and if you've never subscribed, I think this is the time that you can actually subscribe, because then you get to know when we go live, you get to know of all of these and you get educated. But if you're also wanting to get a little bit more on that particular topic, you can ask us. And from there, we get educated by me and Lebo talking about it. In the same breath, you also get educated. I didn't know much about taxes before I met Lebo. I just knew that I was paying lots of money to SARS. But now I'm a little bit clever because of these conversations. And that's why we have them. But today we wanted to actually talk about something that's very important. I have noticed that there's an elite number of people, Lebo, in our communities.
Yes.
That pay very little to no tax.
100%.
And then there is the majority of us who is paying heavy tax. Now, I have just recently jumped off from the heavy paying tax because now I'm no longer employed. I'm an employer now, right? I employ people. But over and above that, I am very aware and I am consistently educating myself in terms of tax brackets, tax benefits, and having conversations with you. I've also discovered that there's quite a lot that I can do for me to save on my tax, meaning that I'm paying less. But I want us to dig in a little bit deeper today in terms of how can you actually be on each side of the fence? Because those that the elites, how do they actually become the elites, and how do they not pay tax or pay very little tax?
I think first thing first is knowledge. Knowledge is power.
Yeah.
And not just knowledge, having the right people to guide you to the right direction.
Right.
For instance, consulting with tax practitioners, accountants, attorneys, in terms of your income structures when it comes to tax matters. So the difference between the two, it's because the reason why the super elite, they pay little tax to no tax at all, it's because they have put in place structures that allows them to pay little tax to no tax at all.
Right.
And they actually own nothing. So as a result, they don't pay much tax, if not tax at all. Whereas the employed and the poor people, they want to own everything. As a result, they now pay much tax on that on whatever they own, because now everything, when it's now in your personal name, that means every income that comes in you must pay tax on it. But when you have tax structures in place, so your tax structures are the ones that pay tax, and they pay minimal tax possible. And then when the money gets to you, you pay little tax or no tax at all. So depending on the structures that you've employed in terms of your income structures, then that is what allows you to pay less tax, if no tax at all. Like, I'll give you an example. As an employee, you pay up to 45% in income tax.
Right.
But if you are a business owner and you pay yourself a salary, for instance, and you pay yourself a minimal salary as possible, as much as possible, that can only allows you to cover your basic expenses. And all you earn is dividends and return on your investments. So dividends, the dividend tax is fixed at 18%.
Right.
And your company is only paying up to 28%. Then so that shows you that if you have all your assets and your income coming through your company, and you only pay yourself minimum amount in terms of your salary, just for you to cover your basic expenses, and then you just earn most of your income through dividend tax, dividend income, of which is taxed at 18%. And if you compare it to an individual, the minimum that you can pay on individual tax, it's 18%. And then the maximum is at 45%. Whereas if you're earning on the company side, you only, in terms of dividend income, you only pay 18% straight. It's flat. There's no, irrespective of the amount that you are receiving, you're paying a fixed amount at 18%, and that's it. So that's what, and it's not paid by you, it's paid by the company. So when your money gets into your account, it gets it clean. You don't have to pay any additional tax to it.
Well, I remember, I'm not really like out there in terms of the latest gossips and things like that. But I remember at one point reading an article in the newspaper about custom, right?
Yes.
And this article was talking about the fact that they had gone in and searched. I think he had done a song, I think, and that song was talking about how much money he's got and things like that. And
Yes.
and they had gone and done a search on him to see how many properties and things like that that he owned, and they were saying that he actually lives in a house and he's renting, I can't remember how much it was, let's just say 40,000 rand and things like that.
Yeah.
But in actual fact, what had happened, I think it was him and AKA or something like that, and they were talking about all of that.
Yeah.
And with what you are saying here, you are saying that the elite in our communities, those that have money, they actually don't own anything.
Yes.
Is this the fact that maybe that Casper could have done because he didn't have anything in his name?
Yeah. Yeah. So if you don't own anything, so you're not attracting any taxes to you, because all you are using, for instance, if you're renting a house, it's an expense.
Right.
It's not because you don't own it. The income, it goes to the owner. Whoever owns that property is earning a rental income, of which they need to pay taxes on it. But you, on the other end, the money that you're paying, it's an expense.
But
yeah.
but I mean, labor, this is where I get confused, right? And let's define these people. We've got the A, and the A are those people that really are out there. They're the elites, and because they're the elites, they're making so much money, right? Irrespective of how much money they're making, I think when we say so much money, it doesn't really matter how much they're making money, how much they're making. But the point here is that you are talking about something that goes against the grain of what we've been raised to believe.
Yes.
And you are talking about don't own anything. In actual fact, that's what you're saying here. You're saying that the rich people, they don't own anything, but they control everything. And I want to park it there, Lebo, and I want us to talk about what I used to do, because I was in that boat. My house is in my name, and my wife, we say that it's an investment, and in 20 years' time, we are going to reap the benefits, right? And we went on to buy other properties. So I've got lots of stuff that's on my name.
Yes.
My tax bracket, after having conversations, I've realized, I am actually on the highest tax. So for every 1 million that I'm making, 450 doesn't come to me, it goes to SARS directly. Boom, case closed.
Yes.
Then maybe I go and defend my 50,000, and I get a 50,000, and I take my family for a holiday, and I'm like celebrating, yay! I got a refund from SARS.
Yeah.
Right?
Yeah.
And you are saying I am actually leaving lots of money on the table.
100%. 100%.
Right. Now let's kind of like zoom in there, Lebo, because maybe my mind is not comprehending that, because I need to own things.
So Robert Kiyosaki, your favorite guy.
Yeah, Uncle Bobby.
Uncle Bobby, yes.
Yeah.
He says anything that does not pay you,
right,
give you money, and costing you money, it's not an asset, it's a liability.
Right.
So the house that you live in, the reason why when they calculating your net worth, they don't include your primary home, it's because it simply tells you that it's a liability, it's not an asset. So when they calculate your net worth, they're not even going to look at how much whether it's fully paid or not, they're not even going to consider that a house as an asset to add it into your asset list, because it's your primary home. So your net worth, it's exclusive of, so they exclude your primary home. So that on its own, it tells you that the house that you live in, it's actually a liability, not an asset.
Right.
So, and houses were actually created for banks, not for people. I mean, banks, they need a product. They need a reason to lend money. They need to lend more money. So if you go to the bank and you want a personal loan, for instance, they're going
Yeah.
to ask you, what do you need it for? You want to renovate, you want to buy a car, so you need a reason to buy, you want to start a business. Yes, that's a reason, but it's too risky for the bank.
Right.
So they needed a product that is more safer for them to lend money with, so that they can make more money. So hence, if you look at your statement, your mortgage statement, if you're paying for a full term of 20 years or 30 years, you would have paid more interest than the principal amount
Yes.
that you borrowed from the bank. So that's how the bank makes money. They need a product to lend money, to make more money. So the house was made for the bank, not for the people. So it
Okay.
was for the bank to make more money.
Yeah.
So then that tells you that your primary home, it's a it's strictly a liability, not an asset. It only becomes an asset if it pays you money at the end of the month to
Level,
create cash.
by the time I left the bank, I was a young exec, and I had all the good perks and things like that. And I think there's many people out there who are, well, like me, young managers and things like that. And at the moment, they are being hit with a 45%, which is the highest tax bracket in the country.
100%.
And it almost feels like you can't run away from it if you are employed.
You can, but your primary income, you can't run away from it, especially if you are directly employed.
Right.
Then you can run away on that primary income that you earn from the bank, but from your employer.
Okay.
But with your additional investment, then you can structure your investment in such a way that you won't pay the income that comes from that is not added onto your highest tax bracket that you're paying through your employer to SARS. So if you channel all your investment and you put them in a trust, you put them in a company, then that way you are avoiding paying the highest tax in that additional income. So your additional income can escape from the highest tax bracket, because over and above the 45% that you pay to SARS as income tax, there's also an additional 15% that you pay as and when you spend the 55% that is left for you to spend. So if you're spending the whole 55%, on every million rand, you're getting 450,000, then that you're paying to SARS, then 550,000 for every rent that you spend, you're going to pay 15% on it, of which in this case 550,000. When you calculate that 15% on that, then you're looking at about 82,000 rent that you're paying in addition to 450 that you paid to SARS. So over 50% of your money then now goes to SARS. But here's a good thing about now putting a structure in place. In terms of a structure that you put in place.
Oh, there is hope.
Sorry?
I said there is hope. I mean, like your numbers that you were just hitting me with there. I think this is why people like that, or in those categories, are referred to as poor people, because you're working for R1 million, and an odd, R1 million here is just a figure, but it can be any amount. You just need to look at your tax bracket. But in a nutshell, if you're hitting 45 and you've got a plus 15 that you're going to consume as well, literally 55% is going to the state.
There's actually 53 actually, because
53%.
15% of the 55.
Right,
It's not,
right.
yeah,
Okay.
it's not 1 million.
Now,
Because the 450 is already gone. Yeah.
Yeah, but so in a nutshell, 50% is gone.
Yeah, it's gone.
And I think this is where the term comes in to say that those people are poor people.
100%.
Because you're poor in the mind in terms of being aware. But then again, we can't do away with the employment. We need to be employed. I mean, I am employed. I mean, I've got a company where I write books, so I'm employed in that business. I get a salary in there. But the good thing is that at least I own that business and I get dividends paid out. So I'm kind of like on 18%. Yeah. But where you don't have a control now, label, where you're working at SAS or whatever whoever you are working for, you're saying that the investments now that you're putting in place, so continue working, that's great. We need employees in the country.
Yes.
But now the investments that you're making, they don't have to sit at 45%. But the problem that comes in, Lebo, is you don't own those investments. It's your company that owns those investments. How do I brag around now at the funeral and all these other gatherings that I own so and so? Because people want to see my name on it. They don't want to see PTY, because the moment I say it's PTY, it's not yours, it's the company's.
Yeah, I think that's the biggest problem, because now you want to have bragging rights that's costing you money. I'd rather have more money.
Yeah.
I'd rather have more money in my bank account than just to have bragging rights that is taking money out of my pocket. You are bragging, yes, but at the end of the day, you become broke. So what's the use? 100%. So I'd rather structure something that benefits me and my kids in the long run than structure something that is costing me and is costing my family as a result.
So let's break it down, Lebo, very simple here, like baby steps. I mean, talk to me like I was, like 5 years ago, I didn't know nothing. And what are these structures now that the elite use? And I want us to conclude with an actionable task to say, if the rich are doing A, B, C, and I don't have that, I can already start looking into that. But who are the right people that I need to engage for me to start also? Because I mean, the rich are rich, right? But why are they rich? And we can only mimic them by copying and pasting what they are doing, and that's how we get to also to be rich. Isn't that so?
100%. So the rich, if you look in most cases, the rich are not really the smartest people in the world.
Right.
But they look smart because of the smart people that they hire, that they pay.
And those the people that they employ, labor?
Yes, they are the people that they employ.
And those the same employees that are not implementing the same things on their own?
It's unfortunate that people are good at executing on instruction.
Sure.
Than they do that on their personal capacity. I'm not sure why, but I think most people, they just, they would rather look good on someone else's books than on themselves. I'm not sure why. But I think the biggest thing is to have the relevant people that you've employed that are guiding you and are helping you to your company, your trust. So those are the two structures that I would highly recommend in terms of paying the least tax possible. And the good thing about having, when you are working for your company and you're paying yourself a salary, and nothing more than the salary until the dividend period comes, it's because you're allowing the company to grow.
Right.
With its own funds. Then you're only taking this salary for your own expenses, your own living expenses. Then at the same time, the company is able to use the funds that it gets so that it can grow. At the end of the day, it gives you a bigger dividend. So I think that the biggest mistake that a lot of our small businesses that they do, people use the company's funds, they treat them as their own, of which that, as a result, it's going to attract a huge tax burden on you, because if you've used the company's funds, then that means that is the income that you've received. As much as it was the company's income, but because you didn't separate the two, you treated a company as if it's you. You now became the company, the company became you. So there's no separate finances in terms of how you treat your income and your income tax. So the first thing first that people need to do is to separate between yourself, be your own person, and let the company have its own life. So that it has its own income, it has its own expenses, of which your salary becomes part of the company's expenses. Then, as a result, you have the income, the company's expenses, and the net profit before tax, and then your dividends is paid, and then they less the 18% flat rate dividend tax that you get, and then you get your dividend paid to you after they are taxed at 18%. For every 100,000, you only paying 18,000 rand. For every million rand, you're only paying 180,000, as opposed to if you have taken those funds throughout the year and treating that company as if it's your own money, the company's money as if it's your own money, then at the end of the day, the million rand that you were earned from the company, because you were taking it not as dividend income, you took it as if it's your income. Now it's going to be taxed at the highest bracket at 45%.
Okay.
So the first thing is separate the two, then treat the two separately. Secondly, obviously consult with the tax practitioner, consult with an accountant, consult with a business accountant, so that they can consult also with the attorney, so that they can guide you as to what's the best structure for you. Because now another thing is, because every individual has their different goals, their different dreams, and they are at a different level in their lives. So in order for you to get a tailor-made advice, I'd advise you to go consult a tax practitioner. As a result, they will tailor-make your structure according to where you are, what you're looking to achieve, and where you want to ultimately get to.
I think my takeaway from this label is that the rich, I think, let me finish off with the rich, but the poor people, we are in a space where we don't know what we don't know, and we just continue life that way, and we think it's status quo, it's normal. And if we're going to buy a house, we buy in our name, and the society is thinking of us in a particular manner, but actually all of those people are weak, they don't know, and by that we are pressurized with people that don't know, and we also become the don't knows, right? So it's kind of like the blind leading the blind, right?
Yeah.
So out of that, it is imperative to question some things. It's imperative to stop and say, hold on, who else should I be knocking on their doors? And then the rich people, you are saying that they actually are not clever themselves, but they are heavily reliant on people that are clever. And the majority of these people are employees, and they have all these like textbook strategies that they give to the rich, and the rich says, yes, deploy them for me. And what you're saying is, number one, don't buy stuff on your name for investment purposes. Rather have it in a company, rather have it in a trust. But one needs to look at both of these extremely carefully on what suits them.
100%, 100%.
And
so,
the best, yeah. And who is the best person labeled to consult with such kind of things? Because we're all different, like you mentioned.
Yes. So I think the first person, your first point of reference would be the tax consultant.
Right.
Because they have the latest, laws in terms of tax laws.
By the way, Lebo, someone asked me the other day, where do I find this tax consultant? And I've got 2 kids in our household, and they've got a standard answer for everything, right? And that standard answer is Google it.
Yeah, true. They can either Google around their areas. They can Google the tax practitioners. There's going to pop up the Google will pop a number of them around their area, or they can just comment below, and we'll direct you to the ones that we use, and they'll be happy to assist. The rich consult and the rich spend money on these clever people. Yeah. As a result, these people make them more richer because they save them the money that they didn't know they can save. They help them make the money that they didn't know that they could make. So these clever people, they help you know what you didn't know you didn't know. So, so they open your eyes to the things that you didn't know.
Awesome stuff. I think it's been great hanging out with you today, Lebo. I think for me, my takeaway here is that when you don't know something, and you know definitely that you don't know, at least try to find someone else who's doing it and ask the question, how is this done? And thereafter, your mind can then be opened up, and you can then start asking, okay, how can this be relevant to me?
Yes.
And when you meet, I think a lot of people, Lebo, they've got dreams, big dreams. But the challenge is that for many of us, the dreams remains dreams because we are not waking up.
True. If we don't take more action, if we don't implement what we're dreaming about, they will just remain dreams. I call them wishes. It's not even a dream, it's just a wish. So you keep on wishing that you could achieve certain things, because if you dream, then that means you must put a plan in place. And after you put a plan, you must put a goal in place. After you've written down your goal, then you must act on it so that you can be able to attain it.
100%. Boom, boom, you had it right. Lebo, you want to close out for us today? I think today, this topic is a very simple topic in conversation.
Yeah.
But it actually doesn't take, it's not an overnight process to put your structure together, because I struggled with it for a while until I found the right structure that works for me. So it's not a one fit all, or Lebo said this is the structure, or TJ is using this one here, let me jump onto it. It really has to fit in with you, your family, your spouses, maybe your siblings. Maybe you've got a more complicated life than me and Lebo.
Yes.
Right? And for that reason, that's why you need someone who comes in and zooms in into your life, so that they can give you the right recipe for you. And it is a process, Lebo. It's not an event, is it?
Yeah, it's not a process. I think take it this way. If, for instance, you're taking a journey to Polokwane and you've never been to Polokwane before, you only know that going to Polokwane you have to take the N. That's all you know.
Right.
You don't know how many toll gates are there. You don't know how many stop signs are there, how many robots are there. You don't know what else you're going to pass. You don't know how many mountains you're going to pass by, right? But you can only get to know while you're traveling the road.
Sure.
Before you travel the road, you will never know exactly how it looks like to go to Polokwane, how Polokwane looks like, how the road looks like to Polokwane. But until you take an action and you get on the road, get in your car, you get on the road, and you start driving towards Polokwane, you'll discover what you do not know, and
Yeah.
you'll know what you do not know you do not know. And as a result, you also discover, like for instance, when you get to the toll gate, what do you need in order to pass the toll gate? How much you need to pass the toll gate? Until you get there, you never know. So the biggest thing here is action, 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 and action.
And you might get stuck at the toll gate actually for maybe an overnight or something like that. But you still get into Polokwane, isn't it?
Yes, 100%. But until you travel the journey, you will never know how it looks and feel like.
And I think I think in closing, Lebo, what I want to also stipulate here is that, and this is one of my other struggles with, right? That I also struggled with for a couple of months, if not 1 or 2 years. Once you go into a structure, it's got its own set rules and regulations. There's ways in which you're not supposed to play the game.
Yes.
Right. So in a trust, there's resolutions that you need to fill in and all of those things. In a company, there is shareholders meetings and all of those other things. There is upfront deductibles that you can do. So there's rules and regulation of playing the game in each structure. So it's good to have the structure, but then you also need to play by the rules of that structure, because I've noticed that in some cases, some structures might not be good for you because you don't know how to play within the rules of that structure.
Yes, yes, yes.
And then all of a sudden we're like, trusts, no, they don't work.
Yeah, that's why it's important to consult with these relevant professionals, so that they can guide you to say, look, this is, because the first thing that they need to do is to analyze your financial position or your position where you are as of today.
Right.
And also try to understand where you want to get to. And then they can advise the suitable vehicle that can take you there.
And why level?
And why. Like for instance, I would still use the Polokwane example. If you're going to Polokwane and you want to use a certain transportation, it will take you days.
I think, Lebo, let me jump in there. Let me jump in there. Today, I'm going to use the right example. Yes. I think 4 months ago, if you were to go to Polokwane, it was going to be great in a 2-seater.
Yes.
Fast car.
Yeah. Yes. Yes.
But today, horses around now.
Yes.
You can do a 2-seater.
No, I can't.
Again, you're going to Polokwane.
Yes.
But the vehicle has changed now.
100%.
My kids are a little bit older than Kosi.
Yes.
I potentially might take 2 days to get there because my little Brett wants to see, because they are aware of these holiday destinations. But for you, it might be faster in the same vehicle because Kosi is sleeping half the time.
Yes, 100%. 100%.
And I think that's the analogy there.
100%. So the same vehicle, we're using the same vehicle, but we're getting to the same destination, but at different times because our circumstances are different.
100%.
So, and in order for you to understand your journey, like for instance, you need to know your circumstances and how that structure fit with you, how that vehicle, help you, and why would things be done that way. So consultation will help you get there.
Awesome stuff. It's been great. Lebo, you want to sign off for us today? Seeing that you're the new father here, you know, I'm old and frail.
I think, guys, it's been a pleasure having you. Subscribe, like, comment, and share with your friends. And we'll catch you next time. Have a good one.
Boom. God bless. Cheers. Bye.